What if you could wake up every morning knowing you never have to work again, and your bank account still fills up every month? Sounds like a dream, right? But here's the thing, it's not just for millionaires or Wall Street pros. Even as a beginner investor, you can make it happen if you know the right strategy. So, how much do you really need to invest to live off passive income forever? You'll learn how to calculate exactly what you need in simple terms and discover strategies that even beginners can use to make your money work for you. Before we get to what really matters, make sure to hit like so you can access more content like this. The beginner's secret to success. Let's talk about something super important: choosing the right companies to invest in. There are 2 golden rules to follow when it comes to smart dividend investing. First, always choose companies with stock prices that stay stable over the long haul. Why? Because the last thing you want is to wake up and find your $100 investment has suddenly dropped to $50, cutting your wealth in half overnight. Stability isn't just about peace of mind. It's about protecting the foundation of your financial growth. Look for businesses that have proven their resilience, even in tough times. Second, prioritize companies with a consistent track record of growing their dividends year after year. This isn't just a bonus. It's like giving yourself an automatic pay raise without lifting a finger. Imagine getting an increasing stream of income every year, not because you worked harder, but because you chose the right companies to invest in. This kind of growth means your money is not only working for you, but working smarter every single year. It's the key to turning a simple investment into a long-term wealth-building machine. Pretty sweet. Huh? But wait, how do you know which companies are stable and consistent? Let's take a look at a real-life example. Why is Coca-Cola a beginner investor's best friend? Here's a story that'll make you go, whoa. Have you ever heard of Warren Buffett? He's one of the richest people in the world, and guess what? Coca-Cola is one of his favorite investments. Why? Because it's reliable. Warren Buffett owns 400 million shares of Coca-Cola. Back when he bought them, they cost just $2 each. Today, he earns $736 million in dividends every year, just for holding on to them. No extra work, no stress. Sounds dreamy, right? But here's the fun part. Buffett didn't start out as a billionaire. He started small, just like you can, by buying solid companies like Coca-Cola and letting compound interest. That's when your money grows on itself. Do the heavy lifting, he built his fortune. So the question is, how much would you need to invest to live off dividends? Let's break it down next. All right, beginner investors, let's answer the big question. Imagine you want to earn $1,500 a month, enough to live comfortably in many places. That's $18,000 a year. Not too crazy, right? Now, let's take Coca-Cola as an example. It pays a dividend of $1.84 per share every year. To make $18,000 annually, you'd need about 9,782 shares. At today's prices, that's around $586,900. Whoa, that's a big number, right? But don't panic. There's a trick to getting there faster. By saving $400 a month and investing it with a 10% annual return, the average growth of the stock market, you could reach that goal in 25 years. And here's the cool part. Once you get there, it's like taking a permanent vacation. Plus, your investments can be passed on to your kids, setting them up for success, too. But what if you don't want to put all your eggs in one basket with Coca-Cola? Let's talk about diversifying and keeping your investments safe. Here's the golden rule of investing. Don't bet everything on one horse. What if Coca-Cola has a bad year, or worse, goes out of business someday? That's why smart investors diversify. They spread their money across multiple companies to reduce risk. This is where the dividend aristocrats come in, a group of 67 elite companies from the S&P 500. What's so cool about them? These companies have paid and increased their dividends for at least 25 years straight. They've weathered recessions, market crashes, and tough times, all while rewarding their investors. Think of them as the honor roll of dividend stocks. By investing in dividend aristocrats, you're not putting all your eggs in one basket. On average, they offer a 3% yield and even outperform the market during recessions. Spreading your $600,000 across these companies can still help you hit that $1,500 a month goal. But now, with a safety net of many reliable investments, and to have more access to how to reduce risks, I've put together some exclusive, tried and tested material that's already helping many beginner investors achieve their goals. The link is pinned in the comments. Now, you might wonder, should you always choose dividend-paying stocks, or is there another strategy? Let's wrap it all up with some valuable advice for beginner investors. Okay, beginner investors, here's the million-dollar question. Are dividend stocks the best way to invest? The answer depends on your goals. Let me explain. Before the explanation, hit that subscribe button, and let's keep building your financial freedom together. If your dream is to grow your wealth quickly, to turn $10 into $100 as fast as possible, dividend stocks might not be the best choice. Why? Because companies that pay big dividends often reinvest less money into their own growth. That means their stock prices might not rise as fast as other companies. But here's the flip side. If you want steady, reliable income, dividend stocks are a fantastic option. They let you preserve your wealth and live off the cash flow, all while keeping your investments relatively safe. It's like planting a money tree that grows and pays you year after year. So what kind of investor do you want to be? Are you aiming to grow your fortune or secure a comfortable, worry-free lifestyle? The best part is you can mix strategies to match your dreams. And if you're eager to learn how to pick winning stocks or explore advanced investing strategies, the world of investing is packed with powerful tools, step-by-step guides, and seasoned experts ready to share their knowledge. Whether you're a complete beginner or looking to sharpen your skills, the right support can turn confusion into confidence and make your investing goals more achievable than ever. Now, pay close attention to what I'm going to say, because here's the best part. Remember, even small steps make a difference. Saving and investing just $400 a month can help you reach your goals faster than you might think. Thanks to the magic of compound interest, your money grows on itself, and each year, your investments get bigger and better. It's like watching a snowball roll down a hill, getting larger with every turn. And to help you start off on the right foot, I've saved the best for last. Foolproof tips for beginner investors to achieve success in their investment journey with confidence. Don't worry, it's easier than you think. Follow these steps, and you'll be on your way to success. Learn about companies. Look for businesses with a history of paying and increasing their dividends. Companies like Coca-Cola or those on the Dividend Aristocrats list are great places to start. Open an investment account. You'll need a brokerage account to buy shares. Many platforms are beginner-friendly with tools and tutorials to guide you. Start small. Stay consistent. You don't need to invest a fortune right away. Begin with what you can afford. Even $100 is a great start. And keep adding to it every month. Reinvest your dividends. Instead of spending the money you earn from dividends, reinvest it to buy more shares. This will help your investment grow faster, thanks to the magic of compounding. Here's the exciting part. Every small step you take brings you closer to your dream of financial freedom. So, what are you waiting for? The best time to start was yesterday, but the second best time is today. Your future self will thank you for it. I recommend this video where Robert Kiyosaki talks about how miraculous assets can change your game.